My name is John Bogle, and I'm the founder of Vanguard, the largest mutual fund manager in the world. Yeah, it's a long story, often told, but start with this. And this has to do with taking responsibility. I was hired, I wrote my Princeton thesis on the mutual fund industry. And by total accident, by the way, if I hadn't turned to page 116 of the December 1949 issue of Fortune magazine, there would be no Vanguard, and the industry would not have been, we have changed the industry. And if you think we have not done it yet, I'd argue that. But I would guarantee that every year that rolls on, the simple common sense of indexing, owning the stock market, trading nothing, doing it at low cost, having the ultimate diversification, is basically the way to win. And without opening to page 116, none of that ever would have happened, ever. I was a contrarian kid. All this really, I think, ties to get, and I wanted to write, I can remember this very clearly. I didn't want to write on a subject any Princeton thesis had ever before been written on. And so there went all the classics, John Maynard Keynes, Adam Smith, Karl Marx, you can get down the whole litany. And here is something that nobody had ever heard, an industry described in this article, somewhat about the industry, but mostly about Mass Investors Trust, as tiny but contentious. And I thought, man, they have described old Bogle. Tiny but contentious. And so I wrote the thesis about it. I sent it to Mr. Walter Morgan, a Princetonian, of course. He liked it, and he wrote a letter to the staff, which at Wellington in those days was probably 100 people. So I'm on my way. So I moved up through the firm very quickly. I was pretty much accepted, I think, by everybody as the heir apparent, even when I was this young-looking kid. And in the so-called go-go era, where insane stocks were held by aggressive mutual funds who wanted to buy insane stocks that had no intrinsic value, but where stock price was everything and stock value was nothing. It was a remarkable era. And then the market dropped one year, and we were still in the go-go era, so Wellington Fund dropped more than the darn go-go funds did. And people said, you know, Wellington is even riskier. Well, it was riskier for 1 year, and that was about that. And he said, I want you to take charge and do whatever it takes to fix this company. And everybody knew it was my job. I mean, there were only 2 or 3 people above me, and they all wanted me to do it. And Mr. Morgan, who was an owner of this publicly held stock, certainly was happy to have someone do something to improve the stock price by doing something different, because Wellington Fund was beginning to sink. And so all of a sudden an opportunity came along to do a merger. And the merger had what we thought then were good fund managers, excellent fund managers. And we had a hot fund that our wholesalers, who were getting kind of frustrated by all this, guys who called on broker-dealers, could sell. And they also had a pension business. We never got into the pension business. We were only in the mutual fund business. And you could do all three with one thing, with one move. Heaven, that quickly turned into hell. And that is, it worked out very well for Mr. Morgan and the shareholders of Wellington Management Company from 1966, when it finally got started. And a little after that, I was finally made the president. But the merger gave me 4 new partners, and these 4 investment advisor guys from Boston. And everything seemed to go along okay. I mean, they did what they thought was right, and they all ganged up on me and fired me. Nonetheless, I was out of a job. My way of fighting back, I thought of getting into a different company, maybe trying to buy out. Someone could help me finance it. I didn't have any money to finance it myself. And it turned out the best thing to do was to try and change the structure of the mutual fund industry. So it was then that I decided to start the first index fund. And I had written about it in my thesis. I had been shoved into it a little bit by a man I came to know fairly well, who wrote the foreword to my first book and who I dedicated my then last book to, and that would be none other than the greatest economist of the 20th century, Paul Samuelson. So he said, please, somebody somewhere start an index fund. And I thought, what the heck, I'll do it. A probably more significant date is the date on which Vanguard was created, which was the September 24th, 1974. I was fired on January 26, 1974. But the formation of Vanguard as a mutual company, that was the idea. No profits in anybody except to the shareholders. And without that structure, indexing wouldn't have been very popular, because you can't make any money running an index fund. The reason for the index fund, the reason it works is your costs are low. An index fund with high costs is still an index fund, but only a lunatic would buy it, because the market return less 1% is probably what typical, or 2% maybe, is probably what the typical investor is going to get. So I thought, and this is such a funny story, because it's so logical. I just can't believe all these things weren't done years and years earlier. I said, okay, we won't have a municipal bond fund. We will have three: long, short, and intermediate. Does that sound like genius to you? But within 2 years, every major firm in the industry adopted that pattern. Grown every year since we started the firm. It is now an all-time high of 17% of the industry, long-term assets. We're the largest fund in the mutual fund industry with $2.2 trillion of assets. We have done 70% of the cash flow into this industry in the last 5 years. And we have no copiers. How could that be? Because forgive me for this, all the damn money goes to the shareholders.